Okay, very well, a warm welcome. Good morning, everyone, to the NorNAB Impact Investment Series. We see people are still trickling in, but in light of your time, we'll take a punctual start. A few ground rules before we start. This session will be recorded. If you're interested in the content, please reach out to the NorNAB office. They will make the recording available to you. We have allocated an hour. We will try to be a bit quicker to protect your time, so you can maybe take a coffee before your next meeting starts. And then let's get right into it. My name is Urs Bitterling. I'm the Chief Sustainability Officer of Kubera Private Equity. We are Nordic fund of fund private equity program, investing not only in Nordic buyout managers, but also globally with a focus on specialized lower mid-market players. In that program, we also have an impact program as sort of a sub-strategy under our international buyout program. We have been one of the early members in NorNAB, and we are very happy to moderate this panel today. With me, I have Carina Wessels. She is Impact Manager from Bluefront Equity, and Ingrid Maurstad. She is Impact Director at Catapult Ocean. Both of them are deeply involved in the blue economy, and they will present themselves very shortly in a snapshot on their individual strategies. We thought that the blue economy and ocean-related investments should resonate with a Norwegian audience. I, as a German, need some more facts, so I actually looked it up, how big the blue economy or ocean-related industries really are, and according to Morgan Stanley, ocean-related industries generate $2.5 trillion in annual revenues. Ocean-related industries support about 3 billion people across the globe. So it's probably the single biggest natural resource that we generate profits from and create or base our livelihoods on. The sectors, and Carina and Ingrid will speak to this in much more detail. It's of course the maritime industry, shipping itself, marine solutions in the sense of adaptation towards climate change, changing water patterns, and so on. Sustainable aquaculture, none the least, the ocean also feeds a ton of people. Renewable energy, wind, offshore wind, but also new interesting technologies with regards to wave energy and so on. With that said, I'll shut up. I'll hand over to Carina for a 3-minute introduction to Bluefront Equity, and then we will hand over to Ingrid for Catapult Ocean.
Thank you, Urs. So 3 minutes starts now. So my name is Carina. I come from Bluefront Equity, and we are a private equity investor in the seafood value chain. So we focus specifically on that part of the blue economy that is around the food production from the oceans. We invest into different niches across the entire seafood value chain that we believe are the bottlenecks for further scaling of this industry. Our strategy is a private equity strategy where we do majority stakes into profitable companies with Nordics as the focus, into companies that have product, services, and technologies that enable a more sustainable production of seafood. And it is a fact in our investment strategy that we call ourselves impact driven. And that is because within this industry, the aquaculture industry, there are some key barriers to growth, which are also the sustainability challenges. They're centered around ocean health and fish welfare. These are the key parameters in this biological production that are both the barriers to further profitability and also the barriers to an impactful industry. Because as has been mentioned, seafood as a part of the blue economy is something that accounts for a lot of food production and will be an even more important part of food production, we believe, in the future, because it's resource efficient and has lower emissions than comparable land-based proteins. However, it is still an industry in its quite early developments, as aquaculture isn't as industrialized as food production on land or a lot of other more advanced blue economy industries where infrastructure has come further. So because of that, we still see a lot of challenges around production, which is part of our investment focus. So we invest into companies that have solutions that enable better ocean health, better fish welfare, and in some also ensures better human health in terms of the food that actually ends up on the plate of the consumer. And we believe that these are the key barriers that the industry has to further scale, become more profitable, and the ones that are limiting the sustainable development of the industry. And it is interesting with the facts that Urs also mentioned, with kind of putting some numbers on the blue economy. And for example, aquaculture being Norway's second largest export industry, and salmon being one of the most industrialized aquaculture species globally. We have a unique position here in Norway with the technologies that have been developed around salmon as the most industrialized species. But a fun fact is that salmon actually only accounts for just above 2% of the global aquaculture volumes, which speaks to how much food production that is happening in the oceans of different species in both Asia, Africa, and South America. But the technologies developed around salmon we believe, have a global potential to scale food production, to ensure more resource efficient food for a growing population, while addressing these challenges as the industry scales to ensure both profitability and impact. Thank you.
Thank you, Karina. We will come back to that. Now over to Ingrid for a quick introduction of Catapult Ocean. And just to the audience, because I forgot to say it, I have a few questions written down that I would like to go through first. But please, if you have any questions also during the presentations, or you highly disagree with what is being said on the virtual panel, please write them in the chat. We will also have, at the end of our discussion, the opportunity to go through your questions. I will be following the chat, so please just type away and we will try to cover as much as we can. Over to you, Ingrid.
Thank you. Good to be here. Good to see you. I'm representing Catapult Ocean. So just to give you a brief introduction to what we do. So we have 90 portfolio companies worldwide investing in different kind of ocean impact. So these are our investment domains. So we invest in transportation, circularity, food and water, energy, and ocean data. So it's quite broad, as you see. And we believe here that you can reduce emissions and also have a positive impact on the ocean. As that's also a limitation to scale the industry. We need to find new and better solutions. So just to give a few examples of companies that we have invested in. So this is a wind propulsion system. So Bound for Blue are then they're using these sails to reduce emissions from the ships and reduce fuel use. And in these days, that's really important. So it's not only having a positive impact by reducing CO2 emissions, but it's also reducing costs for the companies. So this is a win-win. Flocean is also, they're tackling the water scarcity in the world. So we know that they have mapped around 90 spots around the world where clean water, drinking water is a really big issue. So they need to have some solutions for that. And the ordinary desalination industry is quite pollutive. So it's using chemicals to clean the water. It's also emitting brine, so very, very salty. When you remove the water and you're stuck with the brine. and it's not very good for the ecosystems around these industries, and it's also very energy intensive. So Flow Ocean is using the pressure of the ocean. So this is 450 meters plus subsea, and can produce clean water from that. So they have already a test site in the west coast of Norway, actually. Ocean rainforest producing seaweed, a lot of utilities, or we can use that for many different things. So both food and feed, but also fertilizers, so more sustainable fertilizers or alternative plastics solutions, for example. So we know that the world it's flooding with plastics, so we need to find a solution for that. So that's just a few examples of the companies that we have invested in. Thank you.
Super. Thank you for these quick introductions on our two impact managers. And it goes without saying, Catapult Ocean is, of course, a bit earlier in the value chain, so more of a venture capital type strategy, whereas Bluefront focuses on growth buyout transactions. When we prepared for the webinar, we promised ourselves we will not start the discussions with yet another definition of impact investing. And the reason for that is actually, and I'm sort of stealing our thunder a bit early, the intention of this webinar today is to show that impact investing is actually not that different from conventional investing. And that is also my sort of leading question to Ingrid and Carina. As being dedicated impact managers within the private equity space, how do your strategies differ from conventional blue economy strategies or funds?
Yes, I can start to that. But like you've introduced with, when we look at this industry, we see the need for long-term value creation, and we believe some of these key barriers to further growth are centered around what we call the sustainability challenges, which we believe is the impact potential to be solved. And in essence, it means investing into companies that get paid to solve a problem. And that is what we believe makes this strategy both one that we call impact investing, but that also resonates across, because without defining impact investing yet again, what we do is not philanthropy. It's investing into companies that are commercially viable and that have products, technologies, services that they sell to their customers because they solve a challenge that is crucial for this industry to further scale. So for us, it's an opportunity within this specific industry that impact and profitability really do go hand in hand in order to enable the long-term growth of this industry.
Yeah, I could just quick comment as well. So for us as well, we're looking at companies that are solving problems and environmental problems, but it needs to be tied to the profitability of the company. It needs to be scalable. So I don't think it differs that much, but they're doing two things at the same time. They're making money and they're solving a problem for the globe. So for our sake, it's just, it makes a lot of sense, because it's a bit to invest in a company that is not sustainable. It's in the wording, it's probably not a good, or I think it's better to invest in companies that are sustainable in the longer term. So this is also for us a longer term solutions that can be here for many, many years.
So far so good. I like that theory. How does the value creation in these sustainable firms differ from, well, it doesn't necessarily have to be unsustainable, but potentially companies that care less or focus less on this? Do you see additional, like, is this better business? Is this just more safe business? How does the value creation in your funds look like and potentially differ from, you know, your conventional plain vanilla thematic strategy that focuses on blue economy?
For our sake, I think it's again tying into the long-term value creation of the industry. I think if you do look at macro trends and thinking about yeah, just the need within the blue economy and the aquaculture industry to produce more food for a growing population, it's about resource efficiency. And no matter if you think about it from a sustainability perspective or not, it's about producing more food with less input. It makes sense from an economic perspective as well, and doing that in a way that takes care of the production. When you do aquaculture, biology is your production, so better fish welfare is better profitability. And we also like to say, kind of on the flip side of, obviously we have to, it's kind of from a responsible perspective, but on the flip side, it's about that kind of companies that are commercially viable, that earn money, are also more impactful because they can actually deliver over time. Companies that, if you look at it on the flip side, that have very impactful solutions, but that no one wants to pay for, they really have no impact because they're not able to deliver their products and services. And that's kind of where in this ecosystem that we have our position. It's to further support these companies that deliver impact from day one, because they have a product that the market wants, and the market wants it within this industry, because that's the barriers to further growth, profitability, and solving the sustainability challenges.
Yeah, for us, we're looking at the companies in or two sides of the impact part. So it's both reducing risk on the sustainability side, if they're not sustainable on governance side or on environmental side, for example. That's a risk for the company. So they might get fines, or they might come in regulations that are just pulling the rug from the company. So they might actually tip over because of change in regulations or bad publicity. So that's just to for once they need to be sustainable, or they need to focus on ESG. And then on top, it's the positive impact. That's the where they can contribute to solutions, and that's where they, for example, Bound for Blue, where they reduce emissions and also reduce costs for the shipping companies. It's a win-win, but they still have to be make sure that the ESG is in. They have control of that as well. Yeah.
So
I echo that as well.
Well, what I hear from you is that, at least when it comes to impact investing in private equity, there is a distinct focus on, for the lack of a better word, solution companies. So companies where whatever they do on a daily basis contributes to a better or more sustainable form of doing a particular activity in a sector. So be it shipping goods from A to B with less emissions, or treating sea lice with less pollution to the ocean. Is that the game here?
Yeah, I would say that. So
Okay.
I think they're a bit in front because they're handling the problems before. So for example, with we have Brim Explorer in our portfolio. So they have emission-free tourist tours. So going into looking at regulations now, that with the heritage fjords in Norway, where there will be zero emissions requirement going forward. So they're in a good position there because they already have the ships. They have thought about this before, and then the others have to change and quite rapidly just find a solution for that. So I think that's an advantage for them, a competitive advantage compared to others.
I think that is a very good point, and we also very often refer to wanting to invest in the companies that are ahead of the curve. And we also have a company up in Svolvær called Tempia that has these cooling and freezing systems where they use CO2 as the natural refrigerant instead of using freon gases. And there again, regulation has become quite strict in EU in terms of phasing out the freon gases. Freon gases are the very harmful synthetic gases that you find in air conditioned refrigerators, cooling systems. That is the conventional way to use across both buildings and industries. And this company Tempia that we own, which is located in northern Norway, has developed these freezing and cooling solutions using natural refrigerants, and they see an increasing interest for their product because others are also then realizing that you're not able to use the Freon gas anymore because of regulation and because it's obviously not sustainable, and that is being phased out. And they see that interest from both Europe, where regulation is the strictest, but they also get requests from other markets, such as in the Maldives, where they have fishing vessels for the tuna fleet, and they're realizing that they also need more environmentally friendly products to cool down seawater. So that's a very interesting development.
So coming back again to this sort of potential opposite between conventional and impact investing, because the way you describe these companies, they're quite, Ingrid, you said they're one step ahead, so they're quite future ready in that sense. As impact investors, how are you, if you look at deal flow, just the opportunity set that you can analyze in the companies that you eventually take on into your funds, how does that compare to, the conventional bit? Are you short of opportunities compared to that? Are you finding enough? What type of companies are you finding? If you could maybe elaborate maybe a bit on pro and cons of sort of the craftsman side or the engine room side of investing in impactful companies in the blue economy.
I think from our side, pipeline is growing. So we're looking at a lot of companies every year. I think last year they were screened around 1,000 companies and interviewed close to 300. And then we invested in 13 in the end. So it's a big pipeline. I think in general, if looking at just how the market's grown, so Catapult Ocean is part of the 1,000 Ocean Startups. That's a coalition for impact investors and also competitions and accelerators. So we started that in 2020 with 6 founding members and 17 members. And then now in 2026, it's 65 different funds globally part of this coalition, and it's still growing. So it's we're glad we moved it to, or took it into, World Economic Forum. So they've been being the secretariat of that the last 4 years now, and now it's growing, still growing. So plan is to spin it out from there as well and make it stand on its own feet. But I think that says a little bit about how the industry is growing, or the focus on having a positive impact on the ocean as well. And I'm not sure, I haven't been to the conventional or the ordinary investment industry, so I can't say how different we are to that, but maybe you can say something about that, Karina.
I can, very interesting to hear the increasing focus. And I guess that's also the perspective that we see both from other investors in the space and from an LP focus as well. The interest for the blue economy is increasing. And just again, referring back to the numbers of how large the blue economy really is. And then if you also look up the numbers for how much capital that is going into this industry, it's still very low in percentage. So it's still a very under capitalized and financed industry. And especially looking at the aquaculture industry, which is in truth still in a very early phase of development. And when an industry is in an early phase of development, you see a lot of new entrants, a lot of new companies coming up. There's a lot of new players that want to get in because it's an industry with high growth. Aquaculture is the world's fastest growing food value chain at the moment. So you see a lot of these different supplier companies that maybe come from other food producing industries or other industries in general that also want exposure to this fast growing segment. So we see an increasing number of companies from different niches coming into the same value chain. And as a sector specific investor within this value chain, we kind of instead of looking at one specific deal or one specific company, do we want to invest in that and then do kind of a market analysis? We have the market analysis and we know which growth niches we want to expose the capital towards, and that's how we find an exposure we want, and then we find the companies that can give us that exposure. And then the business model can vary, because we want exposure to a company, for example, on the genetic side of aquaculture, and then that could be a consultancy company, or that could be a product company, or that could be, maybe it's a software company. So there's different ways to look at it, but we, yeah, to answer your question, we just see an increasing number of companies entering into this space, because more and more people are doing the macro analysis. It is a fast growing industry that people want to get into.
Okay, if I sum up to here, your strategies focus on forward-leaning companies. At times they're quite young, but very innovative, with innovative solutions. If we now turn around and towards what type of LP is this for? These strategies, what LP types do they fit? And maybe you can also share who and what types of LPs, I think more importantly, are supporting your strategies.
Well, we believe it's a range of different LPs that's where this strategy fits. It's like we've been discussing, it's about one of the largest and fastest growing industries globally. It's not a niche specific, just a Nordic focus either. It's a global industry across both even aquaculture, but also kind of the blue economy in general. And obviously we're happy to have Cubera, the impact fund, as part of our LP base, and the other investors that we have range from those who see us through their impact lens, but we also have investors that see us through their profitability lens, because it is a fast-growing industry where you see a lot of developments happening, and it is a huge potential having a small cap private equity strategy within an industry that is in its early phases. There's a lot of entrants, like I mentioned, but that also means huge opportunities for buy and build and aggregating a very fragmented supplier space. So all of these different players then also have the potential, as the industry scales, to become larger entities, which we also believe is important for us to have a focus on in terms of thinking about the exit universe. And we're happy to have a very large range of different types of investors. And to answer your question more directly, we believe this strategy fits into a lot of different pockets. Either you see it from impact or profitability, or food or ocean, or a larger kind of just a growing segment that is important for the future.
Yeah, same here. We have a lot of international investors as well. So from all across the globe and from different industries, I think, we don't have like clear philanthropy in the fund. Some more if they want to push like new industries, like for example coral restoration, that's been historically more philanthropic solution or funded, but now it's also moving to profitability as well, and it's growing quite a lot. If you're looking at insurance companies and how the corals can protect the shores, and also tourist industry across the globe, it's important with corals as well. So they found business model that works there as well. But it needs to be a business model for us to invest, and also our investors, they also expect like market rate returns. So
maybe just an obvious question, and then we'll carry on with the script. But in with regards to return profiles, are you guys any different from a typical venture fund, from a typical growth buyout fund? Is there a discount to be an impact investor? Will I have to expect extra returns, or is it just the same?
I think we're not in the same way, maybe jumping on like the trends of AI and defense now, for example. We see a pull for our companies as well. So they're pulled into this because there are a lot of capital in those industries. So we have a little bit longer perspective, maybe, so 10 plus 2 years. So maybe a little bit more patient investors than conventional.
Okay.
And I guess on our side, we believe it's investors can expect a high return. We do target 25% IRR over 5 years, or 3x which we believe is an attractive strategy. We do see a lot of growth happening. We are working on an exit, and we see a lot of interest for that company from a range of different buyers, which I also think is interesting given kind of us as an impact investor. Who are we selling these companies to? I guess it's moving to another question, but very interesting in terms of the potential in the strategy.
I think what's interesting also, so for the first fund of ours, the best performing companies there are between 7 and 20x. So it's good performers there as well.
Okay, so just to take stock in between now, forward-looking companies across the entire PE value chain, supported by secular trends, sort of a long-term play with rising demand over time for these solutions, and at least market rate returns. And as if we look at your LP base right now, suitable for most types of investors. I think that's all pretty good news. So I need to ask the question, what's one disadvantage of being an impact investor for you guys? Or in other words, what makes your day-to-day harder being an impact investor?
I think for us, because we're early stage, so we invest early and we promise our investors both impact and financial return. It's always a risk that they're pivoting. So now we're, it's like, yeah, we don't want them to be pulled solely into defense industry, for example, or yeah. So it's a balance there. So we need to set the red line somewhere, and making sure that the founders they may have really good intentions, but then they need this market to scale. So that's a bit challenging, I would say, even, and that's also because it might be high returns, but then if we're ending up investing in weapons, that's not where we want to be.
So just so I understand that the underlying assets are not pivoting, whatever, with their technological solution towards other sectors or other sort of applications of their technology, for example.
For example, data companies. So we need to map the ocean floor to support the ocean wind industry, for example. But that's important information also in defense industries, because also underwater communications that can be important for these evolving industries, but also defense. And as long as it's defending a pipe, that's can make sense, because there's a lot of pollution when these pipes are cut, like we've seen in recent years. Huge pollutions there, or CO2 emissions. But then we need to set the red line somewhere. If they put like offense, or if they put a torpedo on these, then that's not what we invested in. That's not what we promised our investors. So trying to work with the companies as well to stay on this, but then we also see that they need to get in a longer term. So how are we looking 10 years, and then they have an impact in 10 years and then we're happy, or do they need to be on the right side?
Okay.
Whole way.
So the red lining
right side,
of okay. Okay.
Yes.
Very good point. Karina, do you have anything to add?
I can add that I think, or tying back to what we've also been talking about, the interest for this industry, I think it's also, it can be a bit of a challenge for some thinking about how it's easy to buy the hype in an industry where there's a lot of new entrants, a lot of new technologies, a lot of new things, and a lot of companies also claiming to be very impactful. So I think it's very important to also, do your research. It is an advantage to be sector specific, to understand the value chain and understand the different drivers, to ensure that you do understand what the actual potential of the companies are. And then on the kind of flip side of that, also in terms of kind of impact investing as a segment, it feels at times a bit like a moving target. I think not in terms of the strategy, because that's very clear for, I guess, both for myself and Ingrid, how we work at our respective funds, but in terms of So a lot of discussions around what's best practice around the frameworks and KPIs and measurement. But I'm starting to feel quite optimistic that we're starting to reach a point where there is an alignment both between LPs and the GPs and other peers on how we communicate which frameworks and how we set KPIs, and being a bit pragmatic. Not everything needs to be aggregated into one KPI across the fund to truly be impact, but it'd be a bit more. I think we need to be a bit pragmatic to be able to continue to drive impact without getting too tied up in all the formalities and reporting requirements.
Okay, because we are blatantly biased towards impact investing, my last question to you guys: what is actually the best part about your job in being an impact investor? So in other words, what's an advantage of running an impact strategy?
I think that being part of the solution and find new smart solutions to the world, that's really, really giving me a lot. So knowing these are industries that will be here as well when my children are grown-ups, and reduce emissions and find new solutions for that, I think it's needed in the world. So I think a lot of exciting solutions that we see and we invest in, and also a lot of really engaged founders. I think that it's an extra drive of these founders as well, because they really, really want to solve the problems they're working with.
Yeah, I agree. And also I believe that I believe it's an industry that has its right in the future, and then we as investors are able to really drive the industry towards the direction that we believe, because looking at food production, it's kind of not a choice that we need to produce more food using less resources, but then we can be part of ensuring that happens in the best possible way, at least in some part. We're not the world champions or the largest yet, but it's about feeling that you have a meaningful part of your work going towards something you believe is part of the future and part of the solution, like Ingrid said.
I just think about how undervalued water, for example, is. So people are so dependent. I think it's people understand a little bit more now in the Middle East as well, or of course people understand, but you can pay like hundreds of thousands for diamonds. No use, it's nice to have, but it's no actually need for it, and then you're not paying much for water. So just how undervalued that is and how important it is,
Okay, thank you. And I think that's very important. Also, impact investing means to be part of solutions that are needed in the future. So a lot of them are actually not a choice. I think that's also very important when we look at that. But with that, we will open the floor for questions. Camilla, I don't see any questions yet, so I don't know if that's a technical solutions or if we've been crystal clear and everyone knows exactly what impact investing is, and that there's essentially no trade-offs compared to conventional investing. So please don't be shy. Let us know if you have a question, and we'll give it a few 30 seconds to see if anything comes in. Other than that, we will wrap up, I think. We thank you for your attention. This is sort of a first try of having sort of introduction level impact seminars. We hope that this will grow into a series, so you will, at least some of us, you will see us again in hopefully another session of this, and we hope we could sort of shed light into how you can invest in a meaningful and impactful way in a very vital sector, not only in Norway, but also globally. I don't see any questions yet, so I think that gets us to the end.
Yeah, but if you have more questions later, just reach out and we'll
yes,
to answer.
Please also,
Absolutely.
exactly. Please reach out. The recording will be available in one shape or form through the NorNAB office. So thank you for your attention. Have a good day. And let's speak soon. Thank you.